Money is a tool. Financial literacy is a skill you can learn. My name is Dave Gallegos. I've spent the last 25 years in the mortgage industry with a front row seat to American financial habits. And what I have to offer is so much more than about mortgages. So join me for a journey into financial literacy, brought to you by me and Zenith Home Loans. I'm your host, Dave Gallegos. Hello, everybody. Welcome back to More Than Mortgage. This is Dave Gallegos. I'm the president of Zenith Home Loans. And with me today is my special guest, Ryan Pettigrew. Ryan is one of the expert loan officers here at Zenith Home Loans. As you know, if you've listened to More Than Mortgage in the past, then what the focus of this podcast has been is I just have, after all these years of being in the mortgage business, 27 years now, I've always said I had a front row seat to the way people manage their finances. And it was an eye-opening experience when I first got in the business about how messed up some people's finances can be. And it really inspired me to I got a lot better the way I was managing my finances and the way I managed my credit. Our goal, when we're in the mortgage business, we don't want to just sling loans. We don't want to just help you get into debt. Our goal is to help our clients create generational wealth for their families. I believe that owning a home is the great wealth equalizer in this country. It's the difference between a family being able to send their kids to college or not. Most first generation homeowners in this country, their lives are completely different 25 and 30 years from now because of home ownership. And that's why I'm so passionate about helping people understand this. And so I've spent the last 20 episodes just talking about credit, and how everybody should have a great credit score and how easy it is to do that. Mm-hmm. It just takes a little time and effort and focus. Nobody cares about your credit as much as you. We talked about spending. We talked about borrowing. We talked about credit cards and buy now, pay later, all good stuff. But what I decided to do was take a different direction after the first 20 episodes. And I wanted to start bringing in people that are in the trenches today, like Ryan, who's talking to clients every day, all week, every week, and just hear some of his experiences in helping people, because I think this will really resonate with you if you are either you're in a home right now, you're not sure you're doing that stuff right, or you'd like to buy a home, you're not sure how that works and how do you go about it. I know that I had a lot of questions. When Lori and I say this all the time, when I went to go buy our first house, I had no idea what I was doing. I just wanted a house because we had a kid and my wife wanted a backyard for her daughter. And so first of all, thank you for taking the time to be here and tell me what's one of the common, you and I already kind of discussed this, but what one of the common things that comes up for people that is kind of a surprise?
No, thanks for having me. And I think this is a really good question that we're talking about in terms of, just what buyers are going through, the lack of knowledge for first-time home buyers, what kind of questions we get, like you said, in the trenches. And I think the surprise is a lot of times what clients can qualify for and what they should be doing. Right. I tell the clients all the time, the could and the should in this industry are a lot different. If you're qualifying, the could and the should are a lot different.
That's a great line.
Yeah.
I like that a lot. It's really good.
It's because we can qualify you up to 50% of your gross monthly income. Let's say you make $12,000 a month. Pretty good salary, right? Am I doing my math right? What is that? 144K, right? 44K a month. That means that I can qualify you if you have no debt for a $6,000 mortgage. Tell me anybody who's making a 144K salary that should do a $6,000 mortgage. Nobody, right? No. But that's what we have the ability to qualify you for. And so we talk a lot about, believe it or not, clients actually coming to me saying, what is a reasonable mortgage payment? And my answer,
really?
Yeah. I've had that a lot recently. I've had that a lot because they see other people buying homes and they're asking themselves, am I being reasonable sticking to this particular budget?
This is interesting because when I first got in the business, we didn't have social media. So you couldn't see the really fancy house somebody just bought, right? You just oh, you bought a new house. Congratulations. And unless you went over there, you weren't going to see it. But
right.
It's a lot different now. There's a lot of keeping up with the Joneses going on. And I'm sure that for some folks, they see that and they say, well, man, I don't think I can do that. Can I do that?
Should I be doing that? Yeah. And I get that a lot from people. And my answer to everyone's different. The mortgage payment that you should get is also in comparison to what other debts you have. Are you a traveler? Do you want to keep your quality of life? Are you maxing out your 401k? Are you investing in other things in your life?
Well, and this is where we get into the discussions about generational wealth, right? It isn't just a black and white should I do this or not question.
Right.
Right.
It's not a black and white question. It's always, and I think this industry, it undermines how much a specific tailored strategy actually is important for specific people, because everybody's financial situation is different. I tell clients, I ask them, when they tell me what is that payment I should get into, I let them now reflect on what I have to say about how do you want your quality of life to be.
That's a great question. I don't think I ever asked that question that way, but that's a great way to ask the question, because now you're making me think about, well, we like to go to Mexico twice a year or something, right? Like whatever it is I want to do. I don't want to stop doing that because I bought a house.
Right. And the answer for me was different. I was willing to push my mortgage payment up to create the home that I wanted for my family. I'm okay not taking as many vacations. To other people, they're vacation seekers. They're quality of life type people. And so the answer is a little bit different. Granted, I've got the ability as a fully commissioned salesperson to increase my income pretty substantially year over year. That's the other thing you want to ask yourself. Where is your income? Where is it heading? But where can you be conservatively? I also tell people, what is the lifetime you want to be in this home? Is it a 3 to 5 year home and you want to use it as an investment? Do you want this to be your 10, 15 year, 20 year home where you're building a family in this place? Maybe we push that budget just a little bit so that way you can obtain that. There's a lot of conversation that goes around with it, but to tell somebody you should only go up to 35% of your gross monthly income, I think is doing a disservice, because it's not that one size fits all model.
Well, and that's exactly where I was going to go with this. Is like, it's important so if you're listening to this, it's important to understand it's not one size fits all. It's not everybody should do this. And that's where when you're talking to, it doesn't matter who you talk to. Yes, we own a mortgage company. I own a mortgage company. Ryan works here. We want to sell mortgages. It's how we make a living, for sure. But we don't want to just take the order that you're giving me, which is, hey, here's how much house I want to buy, and tell me what my mortgage payment is. Now let me fill out the application. Like, that's not how we do this. And that's really not what you want, which is what, I'm not going to name any names, but it rhymes with sprocket. If you just want to get a mortgage and you don't want this level of consultation, then you need to know the answer for yourself, because they're going to let you do, most mortgage companies, most people will let you do whatever you tell them you want to do. And so will we. But we want to take a consultative. It's not like we're going to say, no, you can't do that. We don't think that you should borrow that much. But we are going to let you know what you can borrow, for sure, right? Like,
for sure.
Part of the discussion.
Well, clients tell me, what can I be qualified for? I say it's double what you want to do. So do you want to see what that looks like for an $8,000 mortgage payment? And they'll laugh at me. Right? That's one thing. The other thing is to your point, is if we're order takers in this business and you have come and you've saved 20% down and that's been your life's goal to put that down, it would be a detriment for me not to open your mind to other options, higher or lower. So I show clients, hey, what if we actually kept 5-10% on hand? How does that impact your monthly payment? Would you rather have $100,000 left in the bank and only have $600 more in payment? What's most important to you? And some people are like, wow, maybe we split that gap. Maybe we keep 50K because it's only $300 a month. I mean, if it were me, I would rather have money. No, I want 50K in my pocket.
It's always good to have money and not need it.
Exactly. And that's what I tell them.
Money and not have it.
Once it's in your mortgage, I think you're probably the person that taught me that line. It's better to need it and not have it, right? And down the line, if you saved up.
Better the other way around.
It's other way around.
Yeah.
There you go. Thank you.
It's better to have it and not need it.
Have it and not need it. Yeah, it's better to need it and not have it.
Wait, what? I didn't say that.
Right. No. So, what we're trying to say is liquidity is such an important piece to this process, when people have told us that the more the merrier when it comes to a mortgage in terms of your down payment. And so we just want to make sure that everybody has that knowledge, because you can see the light bulb go off in people's eyes when you show them other options. And if they still choose to go with the option that they want to go in with, great. I've done my job. I've shown you all of the different routes.
Right.
And there have been times where people are like, no, yeah, I want to do 5%. We had clients that thought that just went under contract this week. If they would have gone and said, we want to do 10% down on this house, if they want to go there, then at that point, they would have just taken that and they would have gotten deflated, because I showed them that cash to close and they're like, man, that's really high. And then I showed them 5% and they decided that they were like, wow, we didn't really realize we could do that. And otherwise they may have not looked at a house.
Well, and I think that's where it's important, because it's heartbreaking to me to think that somebody would make the decision, I'm not going to buy a house because that's how much money I've got to put down. I'm not going to buy a house. And nobody takes this and honestly, Sprocket is getting so much, they're spending so much money in marketing. This is a good company. I'm not bad mouthing them at all. I'm not trying to bad mouth them. They're a very good company. They run really, I'm jealous, but they have a different approach, and it's more of a, well, if you fill out the form here, we're going to fill the order for you approach. And if that's what you want, that's fine. But it's the biggest debt you're going to take on in your life for like 98% of the people in the world. This is the biggest note, the biggest thing that you're going to guarantee. You're personally guaranteeing this, right? Like that's what a mortgage is. You're personally guaranteeing that you're going to pay it. It's the big time debt. And so it's just important to know what all the options are. And what I'm afraid of is somebody would take that advice and go like, I'm not going to buy a house, and then spend the next 5 years paying rent. And if they were buying, let's say, a $500,000 house at 5% a year, I mean, they're talking about missing out on $125,000 worth of equity ish. I'm not sure if that's the right number, but they're definitely going to be losing a lot of money in equity and wealth building, the opportunity that they would have had if they continued to rent. Do you talk about that much? I mean, I'm curious just to know, because I know you do. I shouldn't say do you. I know you talk about appreciation and how that shakes out over time. Are people even thinking about the appreciation side of this?
When you ask, I mean, we're big on motivation, right? We're big on finding out the big picture to why somebody's wanting to buy a house, and that usually comes in the top three. Usually it's emotional, financial. When I say emotional, it means we want to start a family. We want to have a home that we can call home and create our family in. I've had a lot of that recently. And then second is I don't want to keep paying a rent. I want to financially set myself up with success. So that's the equity side of things of it, right? So yeah, usually it's with, something that people bring up.
Are people surprised when you do some of that math? Because I know we're big fans here of a product that's called, we get a total cost analysis where we can compare a couple, 3 loans or as many 4 loans side by side and play out the future 5 years, 7 years, however many months or years you want to look at it. Are people surprised when they see that number? Because they used to really be like, that's not right. Is it? Is that really what it's going to be? Do you still get that?
Yeah, for sure. It's great. The clarity around that. I think that's the piece, especially for first-time home buyers. That's
usually not the motivation.
It's not the motivation of like, I want to go gain a bunch of equity. It's usually, long-term, they know they're going to make some money on a house, and they know they're going to be able to take, the renting part out of it. And then you create the actual visual on it. And it's pretty cool.
I guess, you're a young guy. Are you 30 yet?
I'm 30.
30. So
man, I look at about 30.
You've been in the business 5 years now.
Yep.
What's been the biggest surprise, I guess, of when you first started talking to clients and you first started looking at people's, like, what was the biggest surprise for you? Or maybe the biggest epiphany about like, wow, I did not know this is how this was for people. Like, was there anything like that really like stood out? Like, holy cow, I can't believe this or anything. Cause that wasn't what it was for me. I was just very surprised at how little people had like in savings and how, not that I had a bunch because I didn't, but now I was looking at it and going, man, I need to have some money. Like I need to like save. Or was it the debt that they were carrying? Anything jump out at you?
There's definitely, I think there's both sides of that for sure. Like both sides of, there's a lot of people that have access to a lot of money out there. Right. A lot of family type stuff because, everybody's parents right now are sitting on a ton of equity. And that's a lot of first time home buyers are getting gifts right now. Right. Believe it or not, everybody thinks they need their own money, but there's a lot of first time home buyers that are getting gifts. And yeah, I think there is also the flip side of that coin. I do have clients that unfortunately for certain circumstances have over, last year, $100,000 worth of debt. We're doing a cash out refinance they bought a year ago. So there's definitely two sides to that coin. I think in terms of something that surprised me about this industry, it's the misconceptions about what they can and can't do, right? They think that,
or what they have to do or not have to do.
Sure. And it's just in little things that you should tell clients like,
probably that 20% down thing is the big one, right? We hear
huge.
That all the time.
And then you hear people that are like, wait, I can do 3%? Seriously? And they've done their research, but their research is Google. And Google usually creates more confusion than clarity, right? That's a lot of the surprise for me is that
there's such a thing as too much information, right?
Or just counterintuitive, like, oh, you could do that, or you could do this, and here's all these first-time homebuyer programs that aren't really programs, and there's a lot of misinformation out there too.
Well, and so that's where the biggest key. Look, here's the takeaway. In my mind, the takeaway is, people that own a home, people that know about buying homes. You have to be really careful about talking to your Uncle Bobby. And I don't mean anything disparaging about anybody's uncle, what I have seen in my career, certainly, and I'm sure you've seen this as well, is that you get advice from people that don't do this every day.
Yeah, things change a lot.
I think back to the computer tech guy, Lee, that did all our computer works. And he was over at our house, this is 10 years ago. He was over at our house one day, and I asked him if he owned a home. He was working on my laptop. He goes, "No, I don't own a home." And I was like, "Why don't you own a home?" Go through the whole thing. And it's like, I go, "Lee, it's not that hard. Let me just pull your credit." He goes, "No, I have really bad credit." I pulled his credit. He's got 750 credit scores. I'm like, "Why do you think you have bad credit?" He goes, "I had this bad debt." I was like, "Dude, you should just check. Talk to experts." And I sat down with him and I said, like, "Dude, I can get you a house. You can qualify for a house." And I can't remember how we did it, but he wanted to bring his dad with him. And I was like, geez, here we go. Because, when somebody's bringing in the third baseman, right? Like, here's like, okay, here's what I think. And so, but after, I think it was me sitting down and walking him through a transaction the way we do, the way you've been trained to do it, and show people, here's what's going to happen and here's how it's going to work. His dad was like, "You should work with him," because that was really nice. That was a huge compliment for me, because sometimes they still have to I don't think this is a very good,
right. Exactly.
No, this guy was like, "This guy's smart. You should work with him."
For sure.
And so the message out of this is get a referral from somebody you know. The idea of Googling it and going for I'm going to just go like you know people that know people. And that's what you're looking for. You know people who know people. And that's where I still think that's the best place to get a referral, is from somebody you know that bought a house, or from a realtor that you know that says, "I have a really good relationship. I want you to talk to this guy." And in fact, that's what I would tell the consumer, the average consumer. Most realtors, this is a really good message. This is apropos for this right now, right? Most realtors will give out 3 business cards because they think they're supposed to, or they think they have to. Here's the question that you want to ask that realtor. This is just because I don't know if it's going to be us or not, but what you would want to ask that realtor is like, if you were getting a mortgage or if your kid was getting a mortgage, who would you use? Because I don't want to call 3 lenders. You don't want to call 3 lenders. You want to talk to the lender, because you're going to have the same conversation 3 times, and you'll probably get 3 relatively different conversations.
Yeah, and we're going to get relatively the same rate.
Yeah, and so everybody's selling the same thing for about the same price. It's not that different from one lender to the next, but the key is getting a recommendation of here's who I would use. Who would you use? I don't want to call 3 people. That's me. So I think that's some pretty good advice, though. I'm going to talk to somebody and then when you call your buddy, if your buddy bought a house, did you like your lender? Did you trust him? Did it close on time? Those are the questions that you want to ask, right? Did you get good advice? Did he give you options? Because that's really what you're looking for. That's what people need. For
sure. I think having somebody that's genuinely curious about your situation and then takes what you say and provides solutions and strategies for it. That's all you want, right? Somebody who's just a genuinely curious person to what your specific situation is, that will lend itself to a great
really
transaction.
Good advice, dude. This is really good advice. Thank you for taking the time to do this. Got anything else that you would like to add or leave folks with?
No, I would say, you know what, if you're a first-time home buyer, all you need to do is start the process. That's the hardest thing to do. Whether or not you want to buy next month or in the next 5 years, it's always best to just find somebody who's willing to take the time to educate you. And I can guarantee you homeownership will be on the horizon for you at some point.
Awesome. That's a great message. All right, everybody. This has been More Than Mortgages, episode number 21. Thanks, Ryan, for being on. This is our first version of this. I'll be having other guests along. It won't just be loan officers that work here at Zenith. We'll start to bring in loan officers from other companies too to have the same conversation. Thanks for listening. Do me a favor. If you've liked this, please share it. Please give us a rating and let your friends know. Thanks again for listening, everybody. Have a great rest of your day.
Cheers.
Thank you for listening to More Than Mortgage with Dave Gallegos, brought to you by Zenith Home Loans. If you enjoyed this episode, please subscribe anywhere you find podcasts and share this episode with a colleague who would also find value.